one. Here we go. What we're going to be talking about is the weekly VIX. That's a fear indicator. And basically, this is called the SMF MMT Trader S&P 500 3-minute chart. However, what I'm going to do is find a weekly chart because I'm going to show the weekly VIX. And the VIX is a fear indicator that's tied to the S&P 500. Here, down below, and it's showing in the video, is I've got an overlay chart for my new MMTs. And what my new MMTs need to understand is that the SMF MMT Trader S&P 500 1 weekly and the SMF MMT Trader VIX weekly, there is a relationship. They have a relationship. Just like I showed in the previous videos on NASDAQ 100. And what is the back end of the NASDAQ 100? It's the VXN. And they run in opposite price action movements. And when the VIX was falling over here, after it made a big breakout, but when we fell down in that VIX weekly here, you can see where we had, when we were going down through this period of time, you can see this move right here. This goes higher. When that goes lower, this goes higher. Now, there are S&P call options and put options. There are SSO, SDS. There's lots of different ETFs that move in the direction of both of these that you can engage within one single trade. Once again, my new MMTs. I've got a weekly reversal on the S&P 500, and over here I've got a weekly up move. So they run invert in price action, and ratios run in opposite direction. And that's very simple in its own nature. And I will prove it right now. The VIX is a fear indicator. When we're at all-time lows on the VIX, like we were here, we were very complacent in the VIX. The fear, complacency. When you get this low on the VIX, that's when markets are putting in tops. And that's when usually everyone is all in. They're all in. And then after they get all in for a number of weeks, I put in that bottom. Look at that big breakout. Back in March, bam. When I can tell you, when that shoots up, all the indexes in the stock markets, you're going to want to be short S&P 500 stocks. There are so many different things you could do. When bull trends are rallying, this goes down in value. So if there's a bull trend rallying in the indexes, then this goes down. And once again, when this goes down, I'm going to show you MMTs. When this goes down, this was that breakout. That big reversal is when we started putting in this bottom. When that reverse there started to come down and do it, that's all part of this bottom and how this bottom was made. You shot back up and tested that thing. That's called fear that was in the market. Shot up 1 teeny, 2 teeny, 3 teenies. What's a teeny on the VIX? $1.94. Or a delta is $1.94 on the SMF platform. So basically what I want people to understand, that weekly one there, and you're getting an uptick weekly here. So we already went over this. Look, we already know that the weekly reversal bar is here. We already did all of this earlier. So basically I'm just going to give the reference so that all MMTs are very coherent. So when I say, hey, look at the VIX, they know, uh-oh, is the S&P going up or down? If the S&P is going to reverse, we're going to see a breakout here. And I'm going to get right down to the business over here. And I'm going to get right down under the hood. And basically what I am going to do is I'm going to populate your VIX, your SMF platform historical data. Watch. Bam, watch these gauges. Look at all that stuff. Isn't that something? Look at that. Woo, woo, woo. Now, it's all populated, all your diamonds, and you got everything in there. Now, what we're going to take a look at is this last week bar on this indicator was 20.23. And basically, the half bar right here, which is this week right here, is that we are 38 cents above the half bar of this price action bar right here. We're 38 pennies. That means that if 0.38 continues to climb, that means that this is going to go higher. And that means that this is going to get weaker and go lower. So basically, as a snapshot here, MMTs, is as we go through the price action, we're going to be looking at what these ratios tell us. Okay? And when there's a big turnaround, when you were minus, right here, when you were minus 2.36, you came back up in this half bar valuation on a weekly level, because these are all weekly lines, and it's $1.94 that it moves. But this is where people, and we've been consolidating 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks. And here, as we were consolidating that fear, that's where no one's complacent. That's where everyone's getting all in the move. Just like they got all in here. And then bam, market correction, bam. Okay, once they did that and had their big sell-off, when it started to go down, we started to rally. Here. Went straight down here, and we went straight up there. Now, what we're looking for is where that change agent in price action and ratio adjustments are going to take place. This slides, this goes higher over here. And we're going to be watching these mathematical equations in our brain. And everything that's in here. These are teenies that moved. If you look at the teeny action, 10.481 deltas equals $20.34 in a weekly move. Between all the price action formulas combined. So basically, all I care about is my MMTs understand. When this goes up, it's time to be buying. When this goes up in value, it's time to be shorting the bull and going long the bear. Related to S&P 500 stocks that are in the index of the S&P 500. So you'll be picking the right ones to put in your trade management plan. And basically, we have consolidated right here. If you take a look at this 4-week consolidation, let's just take a look. Here, let's move this down a little bit for you. And if we get a weekly buy signal over here, if this thing breaks higher, I'm telling you, it's all about the short side. We already have a but we had a beginning and a failure bar here. 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks. Over here, you've got to close above 2232. That's half of this bar. Once you close above that number down here in that info panel, right there, SMF. This is the SMF market maker platform, people. And what it does is it gauges the public and everyone else involved in the behavioral transaction processes that take place with everyone combined in the market. Market makers and floor specialists are outside of that group. That's the big general, big steam engine of Wall Street. And basically, they get real complacent, they get real exuberant, then they get these big breakouts. And then since the last couple of months, this thing has been coming back down to test these breakouts. There is very little fear in here. That's another reason why the lower that this goes, that's why the upper end of these indexes have more challenges up here at that teeny resistance. And the reason why they have a hard time breaking higher is because this is so low. There's a big imbalance ratio. Look at that high ratio breakout here, and take a look at this low deflated ratio over here. So I'm buying inflated if we move, and I'm going to sell the, no, I'm going to buy the deflated, and I'm going to sell short the inflated. And this goes higher. That's going to also confirm your reversal for the week. So we had a pretty good weekly up move in this thing. And the thing about it is, the stronger that it stays overall in the bid and ask trend ratio, if the bid and ask trend ratio down here in these two columns in your pricing controls with your half bar, if these things are going in the right direction, meaning that it's minus 1.2 211 on the week, and if that goes in a certain direction, either this is going to break higher, and you're going to be watching these bid and ask ratios, because if these are not going to go, if these are going to go higher, then these bid and ask trend ratios over here, these bid and ask trend ratios over here are going to go the opposite way, and these bid and ask trend ratios over here, damn it, these bid and ask trend ratios in this column are going to go one way, and the ones in this column on the index, S&P 500 index, is going to go a certain way. And you'll combine them two together. You've been given a gift, and there is no fear. And the less fear, the less complacency is generally within any cycle movement, is when that particular period of time is where your buyers are all in and your sellers are going, your buyers are all in and your sellers, your profit takers, is what's going to move this higher. So as this goes down, this people will start acting in fear over here. And the higher this goes, the more fear that's getting put in the market. If this goes higher, you need to be shorting lots of stocks. And we're going to be putting all the bull and bear ETFs and everything that's related to its compartment, its index. VIX and S&P 500 go together, and then we'll put all the trades in there. We have them on the stock market funding website, dailystockcharts.com, and we have plenty of them. Go there and find them. Over all these periods, we were long here, we were long here, we got long here. So, but then we were short here. At the bottom of that, that's that June move. Okay? And July moves coming off the bottoms. So basically what I want people to understand is that that's the reversal there, and we're going to look for higher. If we go ratio up, we're going to go ratio down. And basically that's the fear indicator called the VIX equals the S&P 500 and the trade managements that will go into it. Another thing you're going to enjoy is how they break higher and how this breaks down and how to get your trade management. Once again, it's Saturday, it's 11:25 a.m. Pacific Standard Time. Today's date 11/13/2010. And basically what I am going to be doing is I'm going to conclude our index trading for Saturday. And for those people who are around, I'm going to be doing a weekly chart on Human Genome Sciences because it's got FDA approval coming up Tuesday. That'll be the next agenda. Once again, if I'm long here, I make money. If I'm short here, I make money. And I add 4 or 5 of the ones that fit in here with it. I make money all at one transaction. I get paid 5-6 debits at one time. That's what a market maker does. You're not a day trading boom cycle, public cycle people. MMTs, you're here to trade against the public, and you're here to understand everything that they don't. And you're here to take their money. And directional price movement. That's the beautiful thing about being an SMF MMT. Once again, it's been my pleasure. Here's this platform. Here's these ratios. And you will be live in action during the options expiration. If this is breaking higher, the put sides pay. If this isn't breaking higher and it starts to break lower, well, then the call option expiration does extremely well.